So welcome back friends to KYEBYEWAY, where investing is decoded, simplified and maybe even fun. So in just 10 minutes we'll turn confusion into clarity. So let's get started. So friends, we all know that today is going to be the topic is PE ratio, right? Price to earnings ratio. But before we proceed there, we need to learn certain terms which will help us understand PE ratio much better. Okay, so one such term is what is profit. So profit is the money you have left after you've paid all your bills. So just imagine you sell lemonade and you earn 100 rupees from it. Okay, but you've spent 30 rupees on lemons and sugar. Okay, so whatever is left, which is 70 bucks, is your profit, right? So which is nothing but basically your earnings minus your expenses is your profit, right? And the basic formula is profit is equal to revenue minus expenses is your formula for profit. And here there are two kinds of profit that we are going to look at. One is gross profit and the next one is net profit, right? Excellent. Let's see what it is. So gross profit is the money you have left after you pay for the main things you need to make your product. Okay, so in your lemonade stand you spend 5 rupees on lemons, sugar and cups, right? So let's say you sold all your lemonade for 10 rupees. So the gross profit is 10 minus 5, which is 5 rupees, right? So here gross profit is rupees 5. It's like the basically it's whatever is leftover money after your sales, after you cover just the cost of making your lemonade, all right? Whereas net profit on the other hand is what you have left after paying for all costs. Beside lemon sugar, maybe you also pay 1 rupee for rent to the stand and another 1 rupee for the signs to advertise. So all these cost when you add up, and whatever is left over is called as net profit. So in our case 5 rupees plus 1 rupee for the rent and 1 rupee for the advertisement. So it total comes up to 7 rupees and your sales is 10 rupees. So your net profit would be 3 rupees. You understand? So the gross profit and net profit are extremely important for us to understand what is PE ratio. All right. So you need, I'm sorry, your net profit is 3 rupees. It's what you actually get to keep after paying for everything you need to run your stand. All right. Not just the basic ingredients. Understood? Excellent. So in short, gross profit is what you make after paying for just the main materials, and net profit is what's left after covering all the costs, not just the main material, the other ones also like your rents and your advertisement and all the other costs. Okay, brilliant. So next, what we need to look at is what is price. So imagine you have a toy that you want to sell, and someone asks how much is the toy, right? The price is simply the amount you would sell the toy for, right? So in the stock market, this is the price people are willing to pay for one share of a company at that particular moment at any given point in time, right? So that is also called as CMP in stock market, which is called as current market price. All right. So in this case, the price is 500 rupees. So in the stock market price, yeah, as I told you, the current market price or CMP of one share of the company, right? Excellent. So we just saw what price is. Now let's see what is earnings, right? So imagine you have a lemonade stand. You'll have costs like buying lemons, sugar, cups, all those things, right? So after selling your lemonade, you take the money you made from the customers and subtract all those costs. That is, whatever is left is your earnings or your profit. So earnings is also called as profit, right? So in this case, let's say the lemon costs you about 5 rupees, sugar about 2 rupees, and a cup costs you about 3 rupees. So the total is about 10 rupees, but your selling price is how much? 20 rupees, right? So what happens here? Your total revenue minus expenses, right? So your total revenue is 20 rupees, this one. right? That is what is your total revenue, or it's also called as income. And this is your expenses, right? For the lemon, sugar, and cup. So whatever you're left with is called as your earnings. So you make around 10 rupees per cup. Understood? Brilliant. So friends, we just saw what is price, we saw what is earnings. Now let's see what is earnings per share, EPS, right? This is extremely important, so kindly pay attention. So let's say you have a lemonade stand from which you make around 1,000 rupees after paying all your costs. Okay, so this is your profit, right? So because we are detecting all the cost, all right? So this lemonade stand, if you owned with four other friends, which means each share would represent 250 rupees of earnings, right? Because the total is how much you made? 1,000 rupees, right? After all the cost, right? So you are dividing that with four different friends who helped you start this business, right? So including you. So each share would represent 250 rupees of the earnings, which is nothing but 1,000 rupees divided by 4, right? 1,000 is your earnings and 4 is the number of friends, right? Excellent. So from there, earnings per share is nothing but the net income divided by the outstanding shares. What is the net income? Net income is nothing but your 1,000 rupees. And what is your outstanding share? Four friends, right? So in that case, in short, earnings per share is equal to how much profit each share of the company made. Understood? Easy. It's very, very, very simple. But if you understand this, your when we start analyzing the company's structure, I mean the balance sheet and profit and loss and all, it becomes extremely easy for you. Okay? Excellent. So friends, let's see why is EPS so important. Okay, because earnings per share is important because it shows how much profit a company makes for each share of its stock, right? So think of EPS as a quick way to see if a company is making good money as compared to how many shares it has out there. Understood? So this is why EPS is very, very, very important. So here's why it matters. It acts as a profit indicator, which means higher EPS means the company is making more profit per share, which is usually a good sign. Okay. At the same time, it also helps as an investment appeal. Investors like companies with strong growing EPS. Month on month or quarterly, every quarterly or yearly, if the EPS keeps growing, that's a very good sign and investors really, really love it. Okay, so comparing companies, EPS also helps us compare the profitability of different companies. So even if they are in the same industry, understood? So let's say, for example, I mean, this is not a recommendation, just an example. Let's say Infosys is there in IT, same as TCS. Both of them are in the same IT sector. Whereas when we look at the EPS, earnings per share, that will give us a fair bit of idea as to who's doing better or which companies are relatively stronger compared to both. Okay, so EPS gives a snapshot of a company's profitability, which helps investors decide if a company might be a good investment. Understood? So if you don't understand, kindly rewind this video or please post your questions in the comment box. I will gladly reply as quickly as possible. Understood? Brilliant. So with that, friends, we've come to the end of today's module. So if you have any questions, I kindly request you to type your questions in the comment box below, and I will gladly reply as quickly as possible. Okay? So friends, what we've done is I've divided this concept of PE ratio into three different parts because it is not possible for me to explain the whole concept in one single video. It'll be a very long video. So I've divided into three different parts, right? So our next module will be covering the second part of PE ratio. All right. So before we proceed there, I request you to kindly go through the first part and then understand each and every concept. All right. Brilliant. So I thank you all for your time. Hope you all have a good day and God bless. Jai Hind.